and of course that would be me. Good evening, traders. This video is being filmed on a Monday night for trading, Tuesday, April 28th, 2015. As you know, futures trading is extremely risky, absolutely causes substantial financial loss, is not suitable for the average trader. You got to be a nut these days to like this game. But if you're one of those nuts who like risk and can afford it, you tune in and I'll show you what should be going on for Trading Tuesday. All right, traders, so at livewithoscar.com, we're working on some things. First of all, let me apologize for yesterday's horrible gold call. Horrible. It only gave us about $350 in profit, and then it went about $1,000 the wrong way. Boom! Bad trade. Sorry. Head down, nose to the grindstone. On to the next trade. We did all right in the S&P, but the gold we did not. Bad trade yesterday. Let's move forward. What do we got going on for trading on Tuesday? First of all, we're starting off this day with a red arrow in ES and Nasdaq and Russell, so it's a red Omni. But if you look at number 2, it is a double-sided Omni today. It does start off selling most likely, but it's double-sided, meaning if we dip deep enough, we could end up going back to the buy side of this equation and end up with a long towards the end of the day. But we're not starting off that way. We are absolutely unequivocally starting off with the red Omni pointing towards the downside. So that's what I've got planned to start us off, right? We're going to spend some time on the downside, but you never know, you might find some legs. And why would that be? Traders, some topics on the board. Let's try to cover these. The long and short of it this evening, I will show you both the long and short-term picture, but just using daily charts so it doesn't get too far ahead of us, of what's happening out there, larger picture, shorter-term picture, where we should go. There is a double-sided Omni today. We believe it starts off selling. So as I mentioned, I think we're going to sell a rally, let it dip. If it dips deep enough, we'll consider a buy. Otherwise, we'll get out of the short and sidestep it. Why? Lots of things going on this week. The technical and fundamental picture is bullish, both technical and fundamental in your emini, S&P, Nasdaq, Russell, in our stocks overall. Now, nothing goes straight up, so you get whipsaws on the way up, but I will show you that technically it's bullish. And let's talk about some fundamentals right now. Traders, there's a lot of talk about the top. Once again, the top's coming in. Oh my God, it's another top. I get this guy Pride in my room's been calling the top for 3 straight years. If it goes down for 2 points in the S&P, rushes in the room. Look, the top's in. I told you it's the end of the world. And so do many others. What is wrong with these people? Don't you know how to read charts? I'm not going to get every day trade right, but I certainly don't call a bull market a bear market. And I don't look at a chart that goes like this and go, oh, look, it's a bear, the top's in. You guys are crazy. You know nothing about reading charts. What you know about is letting your mind get loose. And it comes out of your stupid mouths and you speak it in my chat room and to your friends. Oh, look, another top. It hasn't topped out since 2009. When are you idiots going to stop making these calls? I'm getting a little mad now because why shouldn't I? I'm fighting this off. I'm not actually having a winning trade the last week or so. And on top of it, I'm fighting off know-nothing traders that can't read a chart if it fell on their eyes and told them what was going on. Learn how to read charts. Come down to livewithoscar.com and let me show you how to do that. Because one thing Omni has been right with is the general direction since 2009. It doesn't call the top with every wiggle. Let me show you why that's true. So let's get back to fundamentals. Traders, they're calling the top, and let me explain something. You haven't even factored something in yet, you lunatics calling the top. Do you realize we just finished a 9-month dock workers strike, which crippled shipping in this country for 9 straight months? You know how much money they handle on that pier? Up to $1 trillion of goods gets handled. $1 trillion of goods not moving for 9 months. It hasn't even been spoken about. That is a good thing because the economy's still working, the market's still going up with that happening. We had a horrible, horrible winter across the entire East Coast. That's where the wealthiest people are, unless you go down to California, right? And some of them in Silicon Valley. But, you know, per capita, you got the wealthiest people along the eastern coast. They have summer homes. They've got homes in the Hamptons, up in the Poconos. They've got them in the Jersey Shore. They've got them in every lake you can think of. They're all running out this year and spending money and going nuts on them. You know why? They've been cooped up for months on end in their houses. I know this. All my friends are from back east. That's going to factor in. The dock strike ended. That's going to factor in. You've got factory orders now. They're talking about, factory orders. When they order machinery for factories, look, it's been going down for a couple of months. Yeah? How long has crude been going down for? Do you realize the biggest portion of those factory orders came from crude oil? Rigs needing pieces and parts and pumps. Crude has gotten so cheap and so plentiful that they've backed off on those orders. That's the sector that's having trouble, not the entire economy. Plus, you've got people crying that the dollar being expensive is hurting profits only in some multinational companies. Any U.S. company that works in U.S. dollars and sells to U.S. citizens is making a fortune on the dollar going up. Any of us who aren't investing their money overseas is having a great time with the price of the dollar going up. The price of crude has gone down dramatically. Every company in this country and the world is feeling that. These are good things going on, not bad. I am telling you, the fundamentals are as good as the charts. Then you've got QE in Europe. Look what QE did for the United States. For you naysayers, if you don't think it's going to work in Europe, read the numbers. It's working already. These are nothing but good fundamentals that are working in the markets. A 9-month dock workers strike turns out to be a good thing in the economy. You know why? Because it never even affected us. It never even made the news. Now the strike's over. That stuff starts moving around. Just to prove what that dock strike did, I went to Home Depot 2 days ago to order something called a scale blaster. Forget about what it is. It's a $500 item. I went to order it. You know what they told me? You're looking at 6 weeks delivery, Oscar. I said, 6 weeks? They said, sure, there's been a dock strike for 9 months now. You're going to be backed up for 3 to 6 weeks easily. One little item that I needed. That's how much we were jammed up for the last 9 months, and that didn't even bother to dent the economy. I am telling you, the fundamentals are solid here. Let's look at the technicals. Let's move to the technicals now. Traders, with no further ado, let's go look at some charts. Okay, traders, the first chart I'm going to show you this evening, of course, the technicals. We just spoke about the fundamentals. Now let's look at the technicals. They say the futures market tends to lead the stock market, right? They are futures markets. They lead out in the future. Nasdaq had this massive bull flag. That's what a bull flag looks like, and it broke out of that bull flag. Right, here's where it is now. Broke out of the bull flag. This is on a daily, not a weekly. This is happening as we speak. So that's your daily Nasdaq showing you it wants to go higher. If you don't think that it wants to go higher, you see what this was? This was your exact same thing, and this was the end result. So here we are now. It worked in the past. Why shouldn't it work going forward? That's what bull flags do in a nice, strong bull market. You've got the emini S&P bull flag. It just got above it right here. Here's the flag. It's right here now. So that's where the S&P is. Once again, the same sort of look. If you don't believe in this one, did you believe in that one? Eventually, it worked its way higher, as to this one will, or at least it should, because once again, that's what bull flags do in a bull market. So there's your emini S&P. These are just dailies, not weeklies. Once again, Dow Jones Industrial Average. What do we have here? The same thing. You are now above the flag. Did we have another flag that worked? Absolutely. A bit more of an F flag, but there it was, and you went higher. Here we are now in this flag, and you are above it, so the likelihood is we will end up higher, especially after the Fed meeting in a day and a half. Then you've got the Dow Jones Transportation Average, traders. Now, this is a big bull flag. You've got a small bear flag inside of the big bull flag, but it's a big bull flag, and this is the one that will end up working out over time. So maybe the bear flag takes us down into the Fed meeting, I don't know, but then we move higher overall because we're basically just gyrating inside of this massive bull flag before we break out. So you're looking at, of course, the longer term view, even though we're using daily charts. Once again, the dollar index, which has been going up with the U.S. indices, has the very same look. Here's your flagpole, here's your flag, right? Now, you might say, Oscar, look how little that flagpole is. Why would you call that a flag? You're exaggerating. Okay, well, here was the last little flagpole. There was the last little flag, and what happened after that? massive blow up. So I don't care what you guys might think. The little flagpole fits on the little flags in the dollar. Little flagpole, bigger flag. It's what's been happening lately. So we've got a flagpole. We've got a flag. Dollar basically hitting the bottom of that flag. It should stay gyrating in the flag and head back up towards. If we get towards the top, it should take the stock market with it. Here's your longer term view. Now for trading on Tuesday. Russell starting us off with a bearish Omni, red Omni to start off the day. It could go green, but we will start with the red. This is where we're starting. We'll see what happens. Why? Outside day here in your Russell, plus the Omni, of course, is red. And you are now below this channel. Here was your settlement. Here's the channel line. You are below the channel in an outside fashion day. What's an outside day? That means the high was higher than the day before's high. The lower was lower than the day before's low. You settled outside of yesterday's range. It's an outside down day, but it did come down below the trend, and Omni's red. So we're starting off with a short to begin with, and we'll see what happens after we get in that. We may end up long. We're starting off short. Short-term trading now. Then you've got the DAX. And let me tell you right now, the Russell and the DAX are the two markets in the last few days that have been leading around the rest of the indices. The DAX right now has a bear flag. You hit the top of the bear flag for trading on Monday. If the bear flag is going to work, maybe it'll take us down for a day before the Fed meeting. And then on Wednesday, who knows, maybe a nice rally back out. For now, we're going to start off short-term trading, which is Tuesday's trade, with selling the rallies. We'll see what happens once we get there. And then, of course, we'll wait for the Fed on Wednesday and see if they turn this market around for us. Traders, pull your own charts, do your own analysis. Never accept anyone's technical opinion without doing your own homework first. So, traders, you've seen the charts, and that was the long and short of it. We use short-term charts to show you the slightly longer-term picture and the short-term trading for tomorrow picture. So there you have the long and short of it. We have a double-sided Omni. As I told you, it's likely starting off with the red. We'll see if it goes green, but we're starting off red. And I showed you the I spoke to you about the fundamentals and showed you the technicals. They match. Overall, we go higher. QE in Europe, absolutely perfect. As I said, dock worker strike is over. Now all that stuff starts moving. That's not going to hurt. Summertime coming. You got all the bears that have been hibernating, running out and doing their thing. We should have a very, very good next few months, or at least next 2 quarters. Let's see where it goes, one day at a time. I'll see you all at livewithoscar.com. Don't forget, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll. And I'll see everybody at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.